JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 20th of January 2021. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, guys, yep, there we go. So guys, now let me just close up this and jump into the chart. So the first one, of course, I want to pick up here is Nikkei 225. The index did reverse to the downside today. It didn't really manage to travel all the way here towards the highest point of last week near the 28,980 zone. Initially it did have an attempt to do that, but as you can see, yep, the bears kind of took control after that. So yeah, for now I'm gonna still take a bit of a cautiously bullish approach, because don't get me wrong, we're still trading above all of these upside lines here, which kind of could still provide some support. Let's say, for example, the first ones that I'm looking at are these two tentative ones. One is drawn from the low of the 22nd of December, and the other one is drawn from the low of the 30th of October. As I said, both of these are tentative. Probably one of the main things to watch here could be this 21-day EMA shown as the yellow line here, and just by, I don't know, by coincidence, I mean, it just kind of coincides here with these two, with this line here, right here, the shorter one. So basically, in other words, if this all gets broken, then yep, and then the price falls below the 27,600 zone, then yes, lower levels could be met here. But for now, even if we do see a move a little bit lower here, as long as it stays above all of these upside lines, this move lower could be seen as a temporary correction before another possible leg of buying. If you want to be a little bit more on the safe side, wait for a push above the 28,980 zone right here, which is currently the highest point of January, and then aim for some higher levels, because such a move here would confirm a forthcoming higher high. Now jumping into Shanghai Composite, guys, and well, here basically the index seems to be coiling up here a little bit. So of course, overall we're still trading above this upside line drawn from the low of the 19th of March. Yeah, for now it's basically this is what I'm keeping an eye on. And let me just draw the second one here. Probably need to zoom in here a little bit. There we go. So basically you can see what I'm talking about. So basically the index is coiling up here, and that means that we're waiting for the next kind of move here. For this, we're waiting for the next move here for this index to either to break this upper side of this little triangle or the lower side. Until then, although yes, we are overall trading still above this upside line, but given that the index is has quite distanced itself from this upside line, so that's why I'm not excluding really a drop through the lower side of this little triangle, and then yep, we could take it from there, guys, because then we could go maybe for some slightly lower areas. But again, anything up until this upside line could be seen as a temporary correction before another possible leg of buying. So keep that in mind, and let's see how that's going to play out. Now jumping into the German DAX here, and you can see that yesterday this downside line drawn from the high of the 8th of January worked out nicely and kind of held the price from moving higher. This is what I talked about. This is what I said in kind of starting from this week, basically, that even if we see a bit of a retracement here to the upside, keep your eyes on this downside line, because initially we were seeing this one dropping lower. You can see that, for example, here on Friday it moved heavily to the downside. It closed the week in the red. However, on Monday we saw the index reversing back up, basically kind of doing the same scenario. There we go. Doing the same scenario as it did here, for example, in the beginning of December, in the first half of December, and then in the second half of December. Basically, initially kind of dropping below the 21-day EMA, but then the next day kind of reversing back to the upside. So again, let's not rush into anything yet. For me, guys, to consider the upside, I would need to see a break of this downside line, and then I could go for higher levels. But yeah. For now it is how it is. So for now, I'm gonna wait here. I'm gonna play the waiting game, and for me, in order to start looking at some lower areas, well, I would need to see a drop below this hurdle here, the 13,795 territory right here. But that's of course for the beginning, basically. I mean, still there's I would prefer to see maybe a drop below this 13,672 territory, 72, 73 here. That's the low of last week, and then if that gets broken, this confirms a forthcoming lower low, and further declines are possible. For now, the cash index is currently balancing near the 13,847 territory, roughly around here still. So basically above yesterday's close, but still below this downside line. So let's see how all this is going to play out. And of course, guys, keep your eyes on today's calendar, the economic calendar. We do have some data coming out here. A lot of inflation numbers from Europe as well, the Eurozone. So we have those. We got already the UK ones, which came out better than the forecasted, slightly better than the forecasts. So yep, that's kind of working out probably well for the pound, but I'll jump into that in a bit. Of course, something also what you can keep an eye on here is the Canadian CPI figures later on, and well, probably the center stage will be taken by the BOC, the Bank of Canada, interest rate decision today. So I mean, no surprises are expected there. The interest rate is believed to remain at 0.25 plus 0.25, of course. But of course, we'll keep an eye on this statement and see how worried is the Bank of Canada. Also, we do have, it seems like we do have the BOE's Governor Bailey talking later on, but if that's the case, I mean, then we'll have to be very careful with the pound later on, because any remarks, because we remember last week when he came out with some remarks, which were positive for the pound. I mean, the pound blew up to the upside. So again, keep that in mind. Be very cautious today. And check out the economic calendar just for more specific details. Now jumping into DXY very quickly. So here the index is kind of drifting back down, and the most important is that it's drifting back below this upside line drawn from the low of the 7th of January. Now, don't get me wrong. Of course, I was saying that this upside line will be still a more of a tentative one for me, because the more important level that I'm going to keep an eye on here is the 89.96 territory right here, together with the 21-day EMA, of course, but still I would prefer to keep an eye on this 89.96. And just a quick reminder what that level was in the past. Now let me just scroll back here into history, guys, a little bit. There we go. So this level right here is the high of, oh, there we go. Let me just capture the high of the 12th of April of 2018, guys. So we'll keep an eye on that one. I mean, you can see that previously, or I wouldn't say previously, but recently it did act as a good area of resistance and then support as well. So now let's see if you can do the same thing again. But for that, we would need to see a stronger move below the 21-day EMA. However, let's not rush into anything yet, guys. For now, be very careful. If the price suddenly starts climbing back above the 90.60 territory, then maybe we'll finally see that little test of this downside line that I keep talking about. Now, jumping into gold, gold is taking positively the fact that DXY is drifting lower. As you can see, the commodity is pushing nicely to the upside. So far, I'm going to stick to the same idea that I've mentioned to you guys recently, that I'm keeping an eye on this 1864 territory, roughly kind of, well, marked by the high of last week, and it's also kind of coinciding with the 21-day EMA and the 100-day EMA. So basically a good potential area of resistance, but even if that gets broken, I'm not saying that from here we'll just start popping higher. No, we still would have to overcome this downside line here drawn from the high of the 7th of August, and then from there, we could start looking at some higher levels. But for now, this move higher here could still be seen as a temporary correction. Okay, jumping into Ethereum. So yesterday in my traders tea time, I talked about Ethereum, and basically what I was saying, guys, watch this 1405 level, guys. And as you can see, this is the reason why. Because, and by the way, for me, let me just scroll back, because I think I need to scroll a lot into history here in order to kind of see what that level was here. And that's better. I mean, it's the best. I mean, it's best visible here on the daily chart, and that's basically too much. That's basically the high of the 14th of January of 2018, guys. So good potential area, and as you can see, so far it has been proving itself to be an important one. So let me just kind of drag this one back to the right. Okay, so you can see that this 1405 territory continues to provide a resistance. Today we're seeing a bit of a setback here. So, but the price, actually the rate here, because we're talking about ETH against the US dollar. So the rate here is kind of still balancing above the above this previous highest point of January, near the 1,350. So this 1,405, that's our barrier, which today got tested again. So if we do get a nice push, strong push above it, wonderful, great news. But again, something that I've also mentioned to you guys recently is that keep your eyes on the monthly chart as well. Look at this monthly candle. I mean, this is the biggest gain, I think, if I'm not mistaken. Actually, no, that's going to be still January 2018. So second probably biggest gain in history here for second biggest gaining month in history here for Ethereum. So yeah, I mean, don't get me wrong. I mean, let's see if we're not going to repeat the same scenario as we had here in 2018, where January was marked by a strong push higher, but February was a strong decline. So again, let's keep that in mind, guys. I mean, I'm not saying that this is going to happen, but again, we're judging from the historic data, or by the historic data. Now, jumping into Ethereum, AUD USD. So this one is pushing higher today. So for now, I'm going to stick to neutrality, to be honest, because for me to consider the downside, I need to see a drop below the 0.7640 territory here. And for the upside, I would need to take a very conservative approach and wait for a break of this downside line, and then maybe a push above the 0.7820 territory here could do the trick for more buyers, because such a move here would confirm a forthcoming higher high. So basically, a long story short, for now, there is kind of bit of a problem here, because on one hand we see the pair trading still above this 21-day EMA. This 21-day EMA continues to provide support, but it's recently the price structure kind of is showing that we are forming lower highs. So yeah, let's see how all this is going to play out. For now, I'm just, like I said, waiting for a move here, a breakthrough one of these areas here, preferably the 0.7640 on the downside and the 0.7820 on the upside. USD JPY here. So this one is a tricky one. So yesterday, once again, we failed to, let's say, push further above this downside line. We did get a very fractional break here, but probably we're not going to really even count that. But in other words, guys, for now I'm keeping an eye on this, still this downside line and this 21-day EMA, because we can't even talk about the downside until we get a stronger move below this 103.65 territory right here. For now, I'm gonna, like I said, I'm gonna take a bit of a neutral stand here and wait for the next move here. And in order for me to consider the upside, I'll take also a conservative approach and wait for a push above the 104.40 level right here, just to be a little bit more on the safe side. USDCAD. So of course the Canadian dollar is going to be the one to watch today. For now, you can see that the pair, this USDCAD, is drifting lower here. The Canadian dollar is strengthening. However, I'm going to be very careful for now. Yes, overall we're still trading below this downside line drawn from the high of the 19th of March, but let's see how, let's not rush into anything yet. Let's see how today's kind of Canadian figures will show up. Of course, in order to aim for some higher levels, I would need to see a push above this barrier here, this 1.2793. I keep talking about this area. If we get that push here, then yes, wonderful. We could go for slightly higher levels, but only up until this downside line, because if you want to look at some higher levels, wait for a break of this downside line. In terms of the downside, the more comfortable level for me here could come on a break here of the 1.2630 zone right here. And then, yep, lower levels could be met, because such a move here will confirm a forthcoming lower low. GBP NZD very quickly here. So now, if you remember over the past kind of video, in the past few videos, I kept talking about this pair, and basically I kept saying that wait for a violation of this downside line, and we would prefer also to see the kind of the daily candle staying above it. So far, we did get a violation yesterday, but we didn't really get that daily candle staying above this downside line. Today, we're just kind of automatically the next candle appeared above here, but doesn't really mean that from here, for example, this could be seen as a positive, because again, this is just an kind of automatic appearance of the candle, which kind of put it above this downside line. So I would prefer actually to have a stronger move here to the upside. Of course, don't get me wrong, since around the 7th of January here, the pair kind of has been moving higher here. So maybe a small correction here to the downside could be possible. First of all, let me get rid of this highlighted area. This is not something that I'm going to be focusing on, and of course not something that I'm going to be focusing on here as well. So what I'm going to be keeping an eye on here basically is that if this pushes straight away higher and makes its way above the 100-day EMA here, shown as the green line, then yes, I'll go for some higher levels. But if it, let's say, decides to correct a little bit to the downside, what I'm gonna consider here, and just a thought here, that something like this, basically, something that could, where the rate could drift lower, it could test the this 21-day EMA, and if this 21-day EMA provides provides support, then we could see a nice rebound and a push higher. Maybe this time we could see that break of this downside line. But again, this is just an idea for now. In order, let's say if this pair decides to drop below the 21-day EMA and falls further below the 1.8848 territory, now that's where it could become a little bit more ugly for the bulls, and more sellers here could be joining in. Euro GBP, so quick update here. I mean, if you remember, I kept talking about this idea that after we saw this nice strong move here to the downside near to the 0.8866 level, it provided good support again. We had a nice rebound already, but this is the scenario that I talked about, where I was saying that if it struggles to move above the 0.8933 territory, then another slide here could be possible. If this time this 0.8866 territory gets broken, this will confirm a forthcoming lower low, and yeah, lower levels could be met. So something to keep in mind here. And for the upside, of course, the same idea remains. The 0.8983, that's what I'm keeping an eye on in order to consider some higher levels. Now jumping into Euro USD here, and the pair is kind of pushing higher. So basically, yes, on one hand, everything's kind of looking quite positive here for this pair. The only little issue is the 21-day EMA here, where we're still sitting below it. So let's see if this one is not going to act as a good area of resistance, because basically, if you want to aim for some higher levels, probably still wait for that push above the 1.2210. But yes, of course, the fact that it climbed above this 1.2130 zone here, that kind of sparks a bit of hope here in the eyes of the bulls. But I would suggest, like I said, if you have entered long here somewhere, then definitely have your stop loss on a break-even position. Just to be on the safe side in order to avoid any possible kind of strong reversals back down. So yeah, first of all, let me get rid of this downside line as well. For the downside, I would like to see maybe a drop below this, not maybe, but I would prefer to see a drop below this 1.2059 territory, somewhere around here, and then yep, I will go for some lower areas. So guys, that's it for this session. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your likes, guys. Thank you very much. Thank you very much for viewing as well. So yeah, that means a lot for me, guys, and thank you very much for doing that. If you want to catch my video later on, my traders tea time is always 14:15 GMT. For now, guys, have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.